Hi there, welcome to Kneppy Invest. In today's technical update, I'll be focusing on 5 companies on the ASX that have seen some pretty good positive momentum in relation to the share price. 4 of these companies have seen this positive momentum in the share price on the back of some pretty good news from each of the companies, including Anson Resources, who released some good news on the 22nd of August and have since seen the share price almost double from that date. So the other 4 companies I'll be featuring in today's video include Magnis Energy Technologies, Tyro, Ventia, and Nuix. First company I want to look at is Anson Resources, another lithium exploring company on the ASX. There seems to be a plethora of these type of companies right now on the ASX, and there's more listing every single day, it seems like. I won't get into whether I'm bullish or bearish on lithium. Over the long term, I'm definitely more towards the bearish side, just because the amount of lithium companies they're now listing and exploring for lithium, and that's a whole different story. But we're focusing on Anson Resources right now, and this is their daily chart going back to the start of 2021. There was a breakout in Anson Resources back in January 2021. In fact, we saw the share price go from about 3 cents all the way to about 15 cents in about 1 month. You also saw massive volume coming in at that point in time. But then we saw the share price really go sideways for about 18 months. And you can just see the movement in the share price going up and down. It's sort of like a wave-like pattern. And that's very normal for a company where the share price is just consolidating. And I think what the market was waiting for was some positive news from this company. And that positive news was released on the 22nd of August, when they reported a major resource upgrade to their Paradox lithium project. We saw the share price increase 26% on that day, from about 15 cents to about 20 cents. But we have seen the share price keep on increasing after that particular news flow from the company. Now, that was a breakout in the share price, because we saw the share price get to 20 cents, and that was at least an 18-month high, could be an all-time high for the company, and the share price has kept on increasing. In fact, the share price has doubled from time they have released that announcement, and you can see the share price moving into an exponential rising pattern right now. I do get a little bit nervous, maybe not nervous, but wary when I see a share price rising exponentially like this, because eventually we will see profit taking coming in, and we have seen profit taking coming in over the past few weeks. That's on those big red down days. But we also have seen a fair bit of buying coming in as well. So increasing volume. So the market is now aware of Anson Resources. I would not be surprised to see this being the most discussed topic on Hot Cuppa, and that is also a red flag to me as well. You want to have a company you're interested in to be probably the least talked about company on the ASX, because that means when it's the most discussed company, there's a lot of froth, a lot of hype in that company, and that hype is driving the share price higher for this company right now. Next company I want to look at is Magnis Energy Technologies. And remember, with Anson Resources, I said I do get a little bit wary whenever I see share price rising exponentially. And with Magnis, we have a perfect example of what happens with the share price when it rises, or just after it rises exponentially. So Magnis Energy Technology share price rose exponentially in October, November of 2021. Share price rose from 30 cents to 75 cents in a very short period of time, in about 1 month. And then we saw a bit of a sell-off and some profit taking coming in, and the share price has not reached higher since then. In fact, the share price increased or decreased from 75 cents to a low of 27 cents over the next 6 months. But 27 cents, or around 27 cents, is a really good support level for Magnis Technologies. In fact, we have seen a share price reach about 27 cents or 28 cents about 5 times over the past 18 months, and that support level has held firm. And then a few weeks ago, the company announced that their New York battery plant has begun commercialization. The market liked that. Share price rose 26% on the back of that news and has continued to climb. And it does look like the share price of Magnis has moved into at least a short to possibly medium-term uptrend. Share price is right now at about a 6-month high. I would like to see all that resistance that we saw develop over the past, say from about September to March last year. And when I talk about resistance, I'm meaning those shareholders who have bought in at higher share prices than 50 cents. in October, November last year, because that is resistance moving forward. The reason that is resistance moving forward for Magnis Energy Technologies is because those shareholders now think this company is a dog stock, because that is the nature of investors, a lot of investors who buy into a company expecting the share price to keep on rising after they bought. When the share price falls after they bought, they automatically assign dog stock to that company. And that is true for Magnis Energy Technologies. So a lot of investors who bought in at 70 cents, saw the share price fall to 27 cents, think this company is a dog stock and they want to sell out. So those shareholders who bought in between, say, September, October last year and March of this year want to sell out. And that is a resistance moving forward for this company. I think some of those shareholders are selling out right now. And that's actually good, that we are seeing some good volume coming through, particularly on the day they announced this New York battery plant was moving to commercial production. So a little bit bullish, more bullish with Magnis Technologies right now, because this company is going to be producing some revenue, some cash flows, potentially positive cash flows over the next few years. And with a markup of $500 million, this company needs to produce positive cash flow, because the whole reason or whole way you develop a valuation for a company is you get the present value of all future cash flows. So the market is expecting this company to be producing profits and cash flows over the next 5 to 10 years. Next company I'll look at is Tyro Payments. And the share price of Tyro Payments has been a downtrend from November last year, and it does look like the trend and the sentiment in this company is started to shift around over the past month or maybe even 2 months. Now, back in November of last year, share price was hovering around about $4 or just above $4. And then there was some bad news from the company. And the very fact that this bad news was in November last year, that could be around the AGM. Maybe they gave out some forward guidance for financial year 22. The market didn't like it. You can just see the share price fell 15% one day and then 5% the next day, and the share price moved into a downtrend then. And then when the company released their half-year results or their full-year results in February, share price decreased 26% on that day, and that continued the downward projection in Tyro Payments share price. Share price of Tyro Payments reached low of about 60 cents or just around about 60 cents towards the end of June this year. And we did see some pretty good volume coming in when the share price did reach its low. So that could have been capitulation, and that is a sign that the share price might be reaching a low. And the share price has started to move into an uptrend. Share price has increased from that 60 cents to current share price of about $1.30. So the share price has more than doubled from those highs in the end of June last year. And then on the would have been the 8th of September, the company rejected or announced they have rejected a non-binding indicative proposal. Share price increased 28% on the back of that announcement. So this is telling the market, this rejection of this indicative proposal is telling the market that there is people out there, organizations, private equity firms out there who think Tyro Payments is undervalued right now. And because of Tyro management rejected this, even Tyro management is thinking this proposal was undervaluing the company. So that's why the share price increased 28%. And the share price kept on increasing the next day on the 9th of September. I think it increased another 10% and closed about $1.38. Some good volume come in. So just looking at this chart, it does look like the sentiment is shifting around. Share price right now is at about a 5-month high. So not quite at a 6-month high, but we're getting towards a 6-month high. So it does look like the trend in the share price is turning around. Sentiment is shifting for this company. The company has rejected a takeover bid. So possibly there will be more takeover bids in the future. That's another thing the market might be expecting moving forward for Tyro Payments. Next company I want to talk about is Nuix, and this has been a shareholder wealth destroyer over the past few years. This company listed on the ASX towards the end of 2020. Share price reached a high of about $12, if I remember correctly. There was a fair bit of hype in this company just after they listed, but bad news after bad news, profit downgrades has seen the share price decrease from that high of about $12 all the way to a low of about 60 cents, which was reached in July of this year. It doesn't mean we won't see the share price get lower moving forward, but at this point in time, that is the low in the share price. Now, the share price has been in a well-defined downtrend since that share price did reach the high of $12. But there has been times where it has been looking like the share price is wanting to turn around. Sentiment is wanting to shift. We saw that in October of last year. See share price increase from $2.50 to about $3.30 in a short period of time. But that potential breakout in the share price failed and the share price kept on falling. However, on the 9th of September, there was some speculation that there was a takeover bid for this company from Reveal. And the company released an announcement saying that the company has not received any bids or written proposals from Reveal. However, share price did increase 25% on the back of this speculation, and the share price, I won't say has broken out, but there is potential the share price is breaking out. Share price is only at a 2-month high, so I would be looking for at least a 6-month high in the share price. But this is another potential takeover possibility from companies who think this company is undervalued right now. Nuix has a markup of 273 million, so that is significantly lower than it was when this company IPO'd on the ASX. So potentially private equity firms, other companies are looking at possible value when they're looking at Nuix, when they're looking at Tyro Payments, and this could be telling the market that Nuix might be undervalued at this point in time. Last company I want to look at is Ventia. Now, this is a recent IPO. They listed on the ASX back towards the end of 2021, so have only been an ASX-listed company for about 9 to 10 months. Now, Ventia is an essential infrastructure services provider in Australia and New Zealand. It does seem like this would be defined as a defensive company because they provide services to essential infrastructures like energy companies, that sort of thing. And that means this company's services will be needed even when there's an overall downturn in the market. And we have seen some positive momentum in the share price of this company ever since it listed on the ASX. The share price when it listed was about $2.10. Share price right now is right on $3.04. Not only has the share price increased 50%, share price right now is at an all-time high, so no resistance moving forward for this company. It could be a buy the dip opportunity moving forward. So we saw a buy the dip opportunity for Ventia back in May and June this year. Share price decreased from about $2.95 to $2.25, and that would have been a good opportunity to take a position in this company because Ventia is not overvalued just by looking at the numbers. So this company has a markup of about $2.6 billion. Revenue of $4.5 billion and growing, profit or expected profit to be about $200 million over the next few years and growing as well. I would expect the profit of this company to be about $260 million in a few years, which would mean the forward PE ratio of this company is 10. So not too high for this type of defensive company that is growing at a pretty good rate over the past few years. The question is whether that company can keep on growing over the next few years at those rates. But even if it doesn't, PE ratio or forward PE ratio of about 10 does look quite attractive at this point in time, particularly when you look at the chart right now as well. So if I see a significant dip in the share price of this company, I would be paying particular close attention to this company and possibly even taking a position in Ventia. That's all I have for this video, this latest technical update looking at Anson Resources and 4 other companies on the ASX. 4 of those companies have released some pretty good news, and we have seen some really good forward momentum, positive momentum in the share price. And Ventia, the only other company that didn't release any positive news, we have seen the share price reach an all-time high, even though it has only been listed on the ASX for 9 months. I do see some positive value moving forward for that company, particularly if the share price does pull back a little bit over the next few weeks, next few months even. If you have any questions about any companies I have featured in this video, I'd love to hear from you. If you have any more insights into Anson Resources, Magnis, Tyro, Nuix, or Ventia, I'd love to hear your opinion and your thoughts on those companies, so leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.